Welcome to the Rim Break Rodeo. We hope this video helps.
In this video, I will explain how to write off tax. Tax write-offs, also known as deductions, are expenses you can subtract from your gross income. This directly reduces the amount of income subject to taxation, ultimately lowering your tax bill. You generally have two options: taking the standard deduction, which is a fixed amount, or itemizing your deductions, where you list individual expenses. Choosing to itemize is usually advantageous if your total eligible expenses surpass the standard deduction for your filing status. Many common expenses can be deducted. For instance, you can often deduct interest paid on student loans, contributions to a traditional individual retirement account, and health savings account contributions. If you own a home, you might deduct mortgage interest and state and local taxes, though the latter is capped at $10,000. For those who are self-employed, business expenses, health insurance premiums, and even home office costs are frequently eligible for write-offs. Accurate record-keeping is absolutely crucial for tax write-offs. You must keep detailed documentation like receipts, invoices, and bank statements to support every deduction you claim. Organize these documents by category, whether in physical folders or using digital scanning applications for easy access. Generally, you should retain your tax records for at least 3 years from the date you filed your return, though some specific situations may require keeping them for 7 years or even longer. When it's time to file, thoroughly review all potential deductions to ensure you don't miss any opportunities. Utilize tax software or consult a tax professional. They can help you determine if itemizing your deductions or taking the standard deduction will result in the greatest tax savings for your unique situation. Additionally, proactive steps like contributing to retirement accounts or health savings accounts throughout the year can significantly reduce your taxable income and maximize your overall tax benefits.
Thanks for watching. Consider subscribing if we helped you.